Okay, let's dive in. We are tearing into the on-chain data for Bitcoin, specifically around that massive price correction on November 21st, 2025.
Yeah, that was a rough one. We saw the price dive into the low 80,000s. It even, for a moment, slipped below 83,000.
A brutal week if you were long with leverage. So our mission here is really critical. What's behind this huge divergence between the market panic and what the structural health of the network is telling us?
Exactly. Is this a crash, or is it just a deeply, deeply necessary correction?
And the sources seem to point to this, perfect psychological contradiction. Up front, the feeling is it's screaming extreme fear. We're talking a fear and greed index of what, 14?
Just 14. But then you look at the deep data, and the long-term holder conviction is, well, it's completely intact.
It's the classic market trick, isn't it? The short-term price tells you one story collapse, while the behavior of the most patient money tells another.
A story of, frankly, aggressive accumulation.
Okay, so let's start with that panic. It was visceral. High leverage positions completely wiped out.
We saw it on the liquidation panels, yeah.
And if you looked at community sentiment, it was just pure capitulation, no bottom, crypto winter, all of that. What data point confirms this was actual loss-taking?
For that, you have to look directly at the spent output profit ratio, the SOPR.
The SOPR, right.
And what's so fascinating here is that the SOPR reading plunged below the 1.0 line.
Which means?
It's not theoretical fear. It confirms that, on aggregate, investors who moved their coins did so at a net loss. You're seeing the quote-unquote weekends getting flushed out.
That's the technical definition of capitulation right there. But, historically, don't we sometimes see SOPR dip below 1 multiple times before a real bottom?
That's a critical question. And yes, one dip isn't a guaranteed bottom.
So how can we be sure this cleansing is, enough?
Well, the conviction comes from the other structural data. If long-term holders were joining the sell-off, then I'd be worried. But they're not.
Right. So the short-term speculators are panicking, but the disciplined investors, the OGs, they're just ignoring the noise. What are they looking at?
They're looking at the bedrock, specifically the HODL Wave Analysis.
Ah, the HODL waves.
Yeah, if you study the coins held for 3, 5, 7, 10+ years, those deep blue and purple bands, they are just incredibly thick, stable.
So no major signs of distribution during that drop?
None. No major signs at all. It tells you the illiquid supply, the coins that define the core conviction of this network, they just aren't moving.
So this whole volatility event is concentrated where?
Entirely in the new coin bands. The supply held for less than 6 months. It's just a transfer from short-term speculators to experienced accumulators.
A classic wealth transfer. Okay, but let's check the macro health. Has this fear pushed us into an overheated zone? Let's talk MVRV Z-Score.
The MVRV Z-Score, it basically tells us how far the price is from the average cost basis of all coins.
Like how frothy is the market?
Exactly. And the sources show the score has corrected well out of that macro bubble zone. We are not fundamentally overheated at all.
That's key. And similarly, the 12-month RSI is moving towards that healthy 50-60 level. That long-term time frame seems important.
It is. It confirms the long-term momentum is resetting, not dying. It's just taking a necessary deep breath to shake out leverage before the next leg up.
So here's where it gets interesting for you, the listener. This environment is textbook. Peak short-term fear, providing a critical accumulation window.
Absolutely. It's the transfer of wealth happening in real time.
Yep.
From speculative new coin hands to patient old coin accumulators.
And the sources suggest coins bought in this panic are, in a way, earning their promotion to that protected illiquid old coin status, which leaves a deeper question for you to think about.
Yeah.
What key characteristics, beyond just surviving a price drop, truly define a successful long-term holder? What conviction keeps those coins stationary for a decade? Think about that as you watch the next candle print.